Today is April 14th, and the market is doing some weird stuff. It started the day up 1% on the news that some of the tariffs on electronics have gone away. Apple is one of the stocks that's performing really well, but slowly but surely, as people realize again that not everything is included in this, things are going down. The US dollar index is taking a hit because treasuries are selling off or were selling off, and the rates were going higher, and that's still happening. So the 10-year has come down a little bit. People are slowly buying it again, but it's still elevated quite a bit from that dip when it went down to 3.9. It's still up like 0.5% to 4.4. The VIX is slowly starting to work its way back up. So some interesting news pieces that I saw over the past week was that the number of Europeans traveling to the US has gone down quite a bit. Austria, Denmark, Germany, everything is down like 30%. US bound flights have seen a drop from foreign passengers. So this is across the world. We're lower than we were last year, literally everywhere. And you can see over here, Canada is like 5 to 10% lower than it was last year at the same time. I even had plans to go to the US this year, and I have decided not to. Delta president said the carrier has seen significant drop in bookings from Canada, pulled guidance this week. You can see another drop here from non-US arrivals to the United States is down about 10% from last year. So that's a significant amount of tourism and a significant amount of jobs related to tourism and hospitality and all that in the US that is going to be going down, which is not good at all. Like, this is really bad. We also had the consumer sentiment survey come out, and it hit its lowest point since 2022. You can see that over here. In June 2022, it's 50. Here it's 50.8. This is obviously really bad because it makes people feel like unwilling to spend and uncertain. And this is the number of people that are expecting unemployment to go up next year, and it is the highest that it has been since 2009. 67% of consumers expect that unemployment will be rising in the United States, which is really bad. If you look at the data, sometimes you're like, oh, that's just like people freaking out or whatever, and maybe the data's wrong, but there is truth to these surveys, because when these recessions happened, we didn't really know that they were going to be recessions. Right before the 2001 recession happened, sentiment of unemployment went up. Again, same here. It was a little bit quicker in 2008. This going up right here could mean that we're already in a recession, but we won't know until the future. This huge spike in unemployment expectations is really bad. Additionally, the year ahead inflation expectations was 5% last month, which is already really high, to 6.7% this month. And this is the highest reading since 1981. The 80s were crazy for inflation. And this is 4 consecutive months of unusually large increases of 0.5% points or more. Consumer expectations often do reflect what ends up happening in reality. Sometimes they're wrong. If you keep telling yourself that you suck at something, eventually you will stop doing that thing, or you will be really bad at that thing. Almost a self-fulfilling prophecy. I know economics doesn't always work that way. There is some influence of that type of thing on economics as well, because this leads to people not wanting to spend as much, being worried about their jobs. What consumers are feeling is almost the most representative reflection of what is actually happening in the real world. It means there is usually a reason for it. Okay, I also wanted to talk about this post. So I've been seeing this going around the interwebs recently. This how Canada's quiet bond play forced Trump to drop tariffs. This post that he talks about has a lot of information about basically how Carney and a bunch of other countries orchestrated a bond sell-off in order to cause the US dollar to drop and treasuries to look unattractive, which then led to Trump backpedaling on treasuries. While it's true that the bond market is mostly what caused Trump to backpedal on tariffs, I have found zero evidence that this article is true and that Carney had any direct influence on the bond market. There's a few reasons for this. As of the 31st of March, the government itself only had a reserve portfolio of the equivalent of 50 billion US dollars. So even if the government itself wanted to do something, the majority of bonds are held by just Canadian owners. So Canadian investors, Canadian corporations, Canadian individuals are the majority of US Treasury security holders. The government only holds like 50 billion or so. I can tell you anecdotally that when times are bad like they are now, people are going to buy more US bonds, not less. So I have heard anecdotally that people are buying US treasuries right now rather than selling them. Now, that might change if this bond issue in the US continues to be a problem. And if something is pointing to the fact that the US will not be able to pay the debt it has issued in the form of treasuries. Currently, I'm not seeing any indications that that will end up happening. Like, yes, there are lots of silly things going on, but there's like no shot that every single Canadian has decided to just start selling off all of their treasuries, which is still considered one of the safest assets to hold during a tumultuous market. This has 700,000 views. And if you go into the comments, I left a comment. I'm happy to be corrected, but I haven't been able to find proof of this actually happening. In the comments, it's just a bunch of people that seem to just agree without doing any background research on whether or not this was true. I don't have a problem if it is true, like good on Carney, I guess. I think this is more of just like trying to pump Carney as like this financial savior type of situation. I have nothing against any of the people in this. I just think it's kind of silly to be spreading this information when it is extremely hard to prove, when nobody who would have theoretically been involved has said anything about it. As of right now, like I cannot confirm nor deny that this has happened, but I think based on the data, it's extremely unlikely that this would happen. Because this is all like just gassing up Carney. Fine, yeah, he's probably a smart guy. I don't get what spreading this news article does, especially considering that it's probably not super based in fact. No one's going to watch this video, but if you do, there you go. That's my 2 cents on that. Recently, Goldman Sachs had their earnings. We have a bunch of other interesting earnings, more banks. United Airlines is going to be an interesting one. We'll see if they end up saying the same thing that Delta did. Lots of banks. And then towards the end, I think we have Netflix, on Friday, because that is going to kind of point, I think, a little bit towards consumer sentiment as well. Maybe Netflix will actually benefit from this. Any tech earnings, honestly, should be interesting because a lot of tech companies haven't really had to deal with any tariff related stuff, especially if you're like a streaming service like Netflix. Most of the tariffs have been directed towards finished goods rather than services. China has actually retaliated directly on Hollywood movies, and sometimes Netflix hosts those, so that could be problematic for Netflix. I think overall, these tech companies should actually be relatively insulated. The EU has mentioned that it may tax the big tech companies as well if something doesn't change, because a lot of tariffs have been focused on goods rather than services, and the US tends to export way more services than it does goods because of all the high-tech companies that are there. A lot of the tech-related stuff has not actually been tariffed. When you have tech companies that are involved in goods, like Nvidia or Apple, they do get hit a little bit harder, like Nvidia getting crushed a bit, Apple getting crushed a bit. But something like a Google or a Netflix is doing all right, and Oracle is doing all right. But you'll have Walmart and Costco doing well on the other hand, because Walmart has most of its production locally. It's like 2/3 of the goods that it sells are made in the US. They tend to do well because they sell essential goods. Looking at the market again, I do not understand why it continues to go up. The only thing that makes any sense here is that people are expecting somehow, some way that Trump will eventually go back on all of this tariff stuff. I do have still a lot of holdings in the US. It might make sense to purchase puts against the S&P 500. It's kind of as a hedge. The only issue is that there's so much volatility right now that the premiums are very expensive. It might be worth it if the volatility stays very elevated. As of Monday, I don't really know how much more like seriously crazy news will come out of the White House. I think it'll be a little bit more of a trickle from here on out as this like 90 days of negotiating trade deals situation goes on. The big event that could change all of this is coming to some agreement with China. But I think all of these smaller events are just going to be kind of slow trickles, most likely downwards, because if the tariffs aren't going away or if there aren't indications that they're going to be going away, I think it's likely that people will go away from the market. It's really interesting how, I guess, supported the market seems to be at this level. Like, people really don't seem to want to let it go below a certain level. Like, it hit 5,000 and that seemed to be, for now, the short-term bottom. The next phase will be to see if it breaks through that. As it stands right now, I think it will, because a 10% tariff on the entire planet is bloody crazy. If and when that goes away, then I will change my mind. But until that point, if I could stomach shorting the market, I would hold out and buy in as things go lower. That's it for today. Hopefully some of that was interesting or useful. I'm trying to come up with like interesting news stories, just trying to share what I'm reading and trying to, I guess, work on my own justification for my market strategies and that sort of thing. So that's what I'm doing, and lots of interesting stuff going on out there in the world. That's about it. I will see you in the next video. Bye.